And in our top business story, the UAE Central Bank has announced that as of today, Thursday, March the 16th, it will raise interest rates applied to the issuance of its certificates of deposits, in line with the increase in interest rates on the US dollar. The move follows the Federal Reserve Board decision to increase the federal funds rate by 25 basis points at its meeting as of today. The bank added through a statement on their website that the repo rate applicable to borrowing short-term liquidity from the UAE Central Bank against certificates of deposits has also been increased by 25 basis points to 1.25%. The fixed peg of the dirham to the US dollar means that local interest rates have to be aligned to those of the dollar. A new report by online payment service provider Payfort has predicted that the number of fintech startups in the MENA region will double to reach over 250 by the year 2020. The industry report, titled State of Fintech, was launched during a press briefing this morning, where panelists from Payfort and the spokespeople from the entrepreneurship platform WAMDA shared insights and projections for the industry's growth. Though funding for SMEs has always been a point of concern, the report highlights that fintech startups will raise over $50 million in 2017 alone, while they've managed to raise over $100 million in funds over the past decade. Describing it as a global revolution, panelists added that e-commerce will quadruple in the next 5 years, with a large role played by the fintech sector to support the industry's growth to a value of over $200 billion. The UAE was identified as the regional hub for startups, registering a compound annual growth rate of 60% over the last 5 years, with payments being the most popular service. The report stated that around 86% of young adults in the region as a whole do not have a bank account, and the fintech industry is expected to drive innovation of the financial industry in the long run.
You will always have banks. We're not saying that the banks as we know it will disappear, but the banks as we know it will change. And the way they will change is how they reach out to their consumers or to the merchants that they're supporting. The fastest growing bank in India today was this very small bank a few years ago. What they've done is they've built a technology platform for other startups to come and integrate with the banks to have access to the bank service as an issuer, as a remittance, as a lender. And by doing that, they were able to team up with 50 companies that helped them grow their banking balance sheet. And I think that's the model that a lot of banks have started to adopt around the world, and even in the UAE as well.
In an attempt to regulate business activities on social media, Dubai has introduced an e-trader initiative, which will allow users to conduct business with transparency. The first-of-a-kind initiative is open to Emiratis and GCC citizens in Dubai and was launched by the Business Registration and Licensing sector of the Department of Economic Development under the title of e-trader. Omar Boushaheb, the CEO of the BRL sector at the DED, stated that e-trader will play a significant role in promoting consumer confidence in shopping for products and services on social networking sites, which will also improve accountability and intellectual property protection. He was quoted saying that licensing a business activity enhances consumer confidence and also removes the risk of infringement on a reserved trade name or other intellectual property. A license guarantees the rights of everyone concerned and defines the legal accountability of the merchant. The e-trader license can be registered under the name of a single owner who must be an Emirati or a GCC citizen aged 18 or above and also residing here in Dubai. The e-trader cannot open a shop or issue visas. Officials said that the first phase of the initiative will include creating awareness, and nearly 3,000 e-traders are expected to be licensed in Dubai this year.